All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, Glenn.
On a Monday. How about that?
Yeah.
Thanks for having me.
Thanks for joining the show.
It's an honor and a privilege.
Hey, I'm honored to have you here on the show. Frank is fly fishing, hiking mountains, doing something in Montana. Hope he's having a great time.
Sounds magical. Yeah.
We're here to hold it down. Glenn, we're just going to jump right into the show. I don't care how your weekend was. I'm sure you had a good time. You're like 22 in Chicago in the summer, so I'm sure it was a good weekend for you. We've got a lot to get through, a lot of wood to chop. Hope you brought your chainsaw. I want to talk about what I think is going to become a much more prominent theme. We've talked a little bit about some of the themes in play this cycle. Could be L2s, real world assets, DePIN. That's what we're going to talk about today.
DePIN.
Yeah.
All right.
DePIN.
Let's talk DePIN.
Decentralized Physical Infrastructure, Glenn. Are you familiar with this at all?
I am not that familiar, but it sounds pretty cool.
It's very cool.
Very cool. And dare I say profitable?
We'll see.
All right.
We'll see. The theme today, decentralized physical infrastructure, and actually, really quickly, the chat's open, so what's up, chat? Hello, chat. Post something in the chat. Say hello. Tell us where you're from. Hope everybody's having a great afternoon. We're talking DePIN, decentralized physical infrastructure. I just had to do that real quick, weird, awkward aside from for the streamer.
No, that's great.
In me. DePIN, Glenn, let's just jump right into it before we run out of time. What is it? You've never heard of this before?
Can't say I have. No.
Okay. So decentralized physical infrastructure, it's kind of this emerging crypto concept, combines literally physical infrastructure with blockchain technology. So the ownership and the management of physical infrastructure, things like telecommunications networks, right? Cell towers, wireless hotspots, distributed compute, energy grids, cloud services, so data storage is one of the prominent themes here. All of this physical infrastructure is managed by a decentralized network or managed by blockchain, right? I think we overuse decentralized, but it's just physical infrastructure that's on chain. And so there's a lot of interesting components to this. I think one is the fractional ownership that's involved with tokenization. So you as a participant can help to operate the network, manage the network, and you're going to be incentivized through tokens, kind of an owner of the network in a sense. And so this has all been tokenized, put on chain, but it's actually real world physical infrastructure that we're talking about.
Right.
Participants are incentivized to operate and maintain the network through that token mechanism. And then token holders, generally speaking here, and we're going to get into a few different projects in a second, but token holders receive a portion of revenue that's generated by that physical infrastructure. And this might be a little confusing at first because we haven't talked about the projects, but when we get into some actual examples, it might make a lot of sense. One of the ones that maybe most people are familiar with is Helium, which is decentralized wireless hotspots, and a network that results from that. I will mention that a lot of these projects that we're talking about, the concepts here at play, it's early, right? You could look at this and say, well, who's really using all of this? It's still being built for the most part. It's relatively new. So just keep that in mind as we go through all of this. But we do have some kind of real world examples. And I think that this is, again, going to be a pretty prominent theme this cycle. You're already starting to see, some of these experience some real growth.
Okay. And the origins of this, what was kind of the driver to move some of these things on chain? Was it a security thing? Was it a scalability? Or
that's a good question. I mean, I think that this is just one of the opportunities that blockchain technology lends itself to, where you can remove some of the centralization, and that doesn't necessarily mean it's going to be more efficient, but there could be efficiencies that you gain. I think when we get into data storage, there are some use cases that maybe stand out more than others. Wireless hotspots, for example, telecommunications. These are all things that, again, relatively new, but because there are just different ways that maybe are more efficient on chain or are decentralized and attractive because you don't have a central counterparty or you don't have a central organization that can censor various activities, right or wrong. You don't get that with blockchain.
Or even limited to, a central location, kind of spreading out
Exactly.
among the participants. Okay,
To me,
interesting.
where this plays, more of a role is when you look out and envision a future where you have, just a world of networked devices, Internet of Things, so connected devices, and you probably have a world where the computers are in charge.
In charge.
The AI is a bit more prominent than kind of the let's say the Chat GPT
Okay.
use cases that we have today, where there's a lot more autonomy at play.
Yeah.
This might facilitate that a bit more.
When they take over, at
Possibly.
least,
Yeah.
we can maybe profit.
So we'll connect the dots in just a second, but I want to talk about 5 different projects here. These are not the only DePIN projects, but these are tokens that are available on one chain or the other. We've got the blockchain networks here that you can invest in, you can hold. These are also the tokens that are going to facilitate the processes in this ecosystem, right? It's the tokenization incentive mechanism. So the first one that we're going to look at is render. And this is aggregating GPU rendering power. This is on Ethereum, Solana, on Polygon in terms of where the token trades, up 35% year to date, $2.4 billion market cap. So these things are fairly large, right? But we're going to jump into that one in just a second. Filecoin, Arweave, Helium, and I think I'm pronouncing these correctly, but I don't know. Akash or Akash.
Whatever you say goes.
Mine, right? But we're going to look at today GPU rendering, and you can expand that to aggregate compute power, data storage, which is very interesting, the wireless network that I mentioned before, and then decentralized cloud compute. And so in a lot of ways, you have these existing services today. Obviously, we have telecommunications networks and cloud infrastructure. This is just decentralized, and the barrier to entry might be lower. You might have some cost efficiencies that are gained, but ultimately it removes it from just being owned and operated by a single central authority.
Right. So what's interesting to me here is seeing the blockchain network renders on multiple. Is that something just the token is trading on, or is it built on? Okay, it's not built on.
Yeah, I believe
multiple.
that when we look at render, I think the token first launched on Ethereum and has since migrated to Solana.
Okay.
In many cases, when you look at decentralized physical infrastructure, these protocols are their own chain, or have their own network in that sense. You look at Filecoin,
Right.
or you look at Arweave. These are all networks that are separate from something like Ethereum.
Okay.
But that said, I want to jump into some of these and talk through them in a little bit more detail because I think the use cases are interesting. I wanted to present this before we jump right into what's going on in the market. But let's take a look at render first. And so to talk about this in more detail, and that's the token symbol on the left. So it is RENDER. But here again, we're talking about decentralized GPU, graphics processing units, rendering platform that connects users who might need rendering services with the owners of these GPUs who can then provide those services. So you could see, again, physical infrastructure that's set up specifically for this purpose, and it ultimately could be cheaper for people to use. It could be easier for them to use. So here's how it works. Users purchase rendering power from a decentralized network of GPUs rather than simply relying on centralized services. So as I've mentioned, it could be a little bit cheaper, more accessible, a little bit more flexibility. An example of this, let's say you're an artist, or let's say you're a film studio. You might use the render network, or you might use services or companies that have been built on top of it, applications that sit on top of it, to actually render your graphics or animate something, right? You think about CGI in a movie. Now, you might be a massive movie studio, and some of these things are pretty expensive to produce. You have the ability to do that. But if you're an independent filmmaker, you might not. This opens the door to some of those possibilities. Again, kind of early, but you're certainly seeing kind of real companies that are being built on top of this, offering access to this network and these services. And over time, I would expect that, again, as you think about AI and you think about the role that AI is not just playing in terms of text generation, but image and video generation, there could be some real use cases.
1,000,000%.
With this.
What's interesting to me, maybe this is a stupid comparison, but how does this relate to GPUs? Obviously, the name of the game, really hot in recent years, driving a lot of these chip stocks up. Is this working against the kind of rise in supply? Like now are fewer GPUs required total if they're able to get dispersed out?
Not necessarily. I think it makes it a bit more accessible for someone to access that compute power versus having to have a relationship or having to almost build some of the infrastructure themselves. It just becomes a little bit more accessible. You can think about maybe the barrier to entry is a little bit lower in that case. And so we'll see, again, how this is used or what else is built on top of it. But when you think about physical infrastructure, physical GPU farms here, and a network that provides access to those services, Render is one of the protocols or the projects here that's in that space. So that's one that I think people are familiar with or probably have heard of. It's been around for a little while. Another one that's been around for a bit that also is very interesting is Filecoin. Symbol is FIL, and this is a decentralized storage network that allows users to rent out unused disk space to store data. And you'll see that that's also a theme. We're not quite at the point where I'm renting out some of the space on my phone for someone to run an application, right? It's not that interconnected, but that's kind of the concept or the idea, right? When you think about the aggregate compute power of these decentralized networks, when you think about the aggregate compute power of Bitcoin, for example, versus some of the biggest supercomputers in the world, I believe that by some measures, the Bitcoin network has more compute power. So it speaks to kind of just the strength in numbers there.
Right.
But with Filecoin, storage providers are incentivized to offer this disk space in exchange for the Filecoin token. So that's the incentive mechanism. Again, that has to have value, and there has to be participation in that network for there to be value. But intrinsically, that's how it works. And then users can store files on the network by paying in that cryptocurrency.
Definitely.
The Filecoin token. So an example of this would be just literally anything that you want to store, right? It could be assets for your website, it could be images, videos, whatever. They're going to be stored on chain, decentralized. It could be private. It's alternative to centralized storage. I think for the most part, people generally trust companies like Amazon or Google, but the reality is this could be a bit more private given it's decentralized. Maybe it could be more efficient, could ultimately be a lot cheaper.
All right.
So an interesting concept regardless.
Definitely very palatable. Understand with first the cloud and now this. For a user operates pretty similarly, right? It just has to, now you're using this currency to interact with it. But in terms of kind of scalability, obviously you and I, we don't know where the top is or how big these will get, but very different from Render, where use cases in Render are kind of more reliant on the applications that are built upon it, whereas Filecoin is just the actual mechanism itself, right?
Yeah, and I think going forward, we'll see businesses and applications that are leveraging some of what we're talking about here today in some ways, built on top of it in some ways. And so, yeah, it's tough to say how does this evolve, but I think some of these early use cases and what's kind of popping up here today is pretty fascinating at the very least.
Absolutely.
And that's why, again, I think this could be something that has legs in terms of an investment theme when we look at where we are kind of in this cycle. And Filecoin has been around for a little while, as well as Render. The next one I want to look at is Airweave. And this is a decentralized storage protocol that's designed to offer permanent and immutable data storage. So that's the key here. So within that network, miners are incentivized through the token, again, to store data permanently. The more data that they store, the more they're rewarded. And this could be popular for, let's say, a journalist that wants to release something such as an article that we want it to be out there. You know, you're concerned with censorship, for example.
Interesting. Okay.
There is an application. I keep calling it an application, but there's a service called Mirror, and Mirror uses this to really have a publishing kind of platform that people can use. It's kind of Web3 native, crypto native publishing platform that if you wanted to put things out there, it would be permanent, immutable. And so it could be popular for archiving important documents, hosting websites, just anything that requires immutability, such as historical records, academic research. What else do we have up here? Digital art, NFTs. Because even with NFTs, you think about the artwork itself, in many cases, those files are just stored on a centralized location.
Right.
So they could be deleted. That token that pulls that image or is associated with it, well, that image could be deleted. And so it doesn't seem like that's a big deal. But when you look at where some of the risks are and whether something is or isn't decentralized, this lends itself to more use cases where this is permanent, it's on chain.
Interesting. And so this is another layer of security, or this is just space on chain? That how is this permanency?
Yeah, so I don't know the technical specifics around how this actually functions in that sense, but it is a new chain. I mean, it's separate from, it's not like this is an added layer to anything else that exists. This is now where you would store those assets. And then as long as, right, I mean, there's always a risk like this stuff just dies, goes away.
Right.
But as long as this is functioning, you have this feature where it's immutable and you're able to store it. You're going to pay in the token, but that's the incentive mechanism.
And so is there no risk with, I forget what network this is on, but is there a risk with this not being on one of the big networks?
Oh, I think there's ultimately a risk around, does anybody even use this, right? Yeah. It's on its own network. But if these things don't take off, and just the ones probably should have taken a step back and just mentioned that in no way is this advice that we think, oh, this is going to do well or that's going to do well. I think if I jump back to where we are, some of them are up 100%, others are down 45%. Filecoin down 43%. So, they've been at much, much higher prices. This all depends on more usage and more utility ultimately over time, the network effect, which is true of any of these technologies that we're talking about, but that's also a risk.
Right.
That maybe this is a novel concept, sure, but isn't used by anybody.
Interesting. And so,
or something else that's better comes along.
Yeah. Along those lines, something else that's better, do you imagine a space where like this Airweave is the winner because it came first, or could that be replicated on like the Ethereum network or on a bigger network, and that kind of added buffer of users helps that take off versus this one? Like, how do we?
Yeah, it's tough to say. I think any of these ideas or concepts could be disrupted by newcomers. They themselves are the newcomers, and these are still very nascent kind of concepts that we're talking about. But I think, like the internet, the companies that made it through the last few decades, there's some of the same ones that were there at the beginning, but not everybody made it. And we have a bunch of new companies that have popped up, right? New use cases. You still have your, let's say Yahoo's, for example, but you have an Airbnb that wasn't there 20 years ago. Yeah. And I think kind of similar things happening here. When you just think about this, just another layer on top of the internet. Okay. Where value can be, transmitted, transformed in one way or another, not just in the sense of its currency.
Right.
So a couple more I just want to hit on really quickly. This is one that I think is pretty cool, which is Helium. So this is a decentralized wireless network. The token is HNT. And the decentralized wireless network enables users to deploy and manage physical wireless hotspots that provide connectivity for Internet of Things or IoT devices. This is predicated on a growing network of IoT devices as well, right? We're probably looking a little ahead here, But this is something where you can participate. You can have one of these physical hotspots. You can manage it. You can contribute to the network. As a result, you're going to receive HNT tokens. So hotspots are owned by individuals or small businesses. They're going to be incentivized through those rewards. Users are rewarded with those Helium tokens for contributing to the network. And I think like anything else, again, it's a network effect. So if you have more people that find value in this, and the network grows, the value of the token that powers that economy should increase in value, let's say relative to US dollars, if that's what we're pricing these things in. So it's used for IoT applications. In theory, this could be for smart city infrastructure as that kind of evolves in different parts of the world, monitoring the environment in certain cases, right? You have sensors that need to be connected to the internet, and this is one way to do that, asset tracking, et cetera. So Helium, if we jump back here, is down about 5% when we look at it on a year-to-date basis, but recently has popped up a little bit. But that's one that I think is interesting, right? Because like the concept is something that you can, it's understandable.
100%. But yeah, where do you think the use case, the most likely use case, widespread is for these kind of wireless hotspots? You've listed a few examples, but what really sticks out to you?
I think it's tough to say because we're probably still at the beginning stages of some of these networks being built out, the devices being connected to one another, probably again run or managed by some sort of AI infrastructure. And so it's tough to say. I mean, I think the sensor one is kind of interesting. Or you think about, not so much that you'd need Helium for this, but you think about just internet-connected devices within your home. Right? And so you could have everything from your refrigerator to your stove to your thermostat. And I think we're kind of there to some extent, all talking to one another on a network. If you think about expanding that, maybe Helium plays a role in terms of being able to power that network on a much more scalable basis. But that's not to say that you wouldn't just see that from existing telecom companies, right? We have wireless networks. This is just decentralized, and there's a way that you as a user can participate. But it might not work at the end of the day, And that's the other thing to consider is, again, a lot of what we're talking about here, from an investment perspective, certainly an investment is going to be speculative in nature. But just because this is a cool idea doesn't mean that, it has legs necessarily over the long run. Same thing applies to name your favorite internet business or service, right? And so kind of, again, some comparisons there where you've got this stuff that's popping up, leverages this technology that's interesting, but not everybody's going to make it. The last one here, excuse me, is Cash. And this is a decentralized cloud computing marketplace that, again, is going to be kind of similar to Render. And you see others as well that we haven't listed here that do something like this. But it allows users to rent out unused computing resources, such as CPU and GPU power, to others that need them. Again, it's like, okay, well, where are the use cases there? What's actually happening today? Over time, this could just be something that, helps to increase or improve efficiencies. If we have more powerful devices over time, maybe we're able to leverage those through these network effects. So again, providers offer their computing resources, and then consumers are going to pay with that token to access those resources in that ecosystem. Could be used for anything such as hosting websites, running applications, performing data processing tasks. Again, you look at where do you pull some of your processing power from when you do things with AI, for example, or when you're setting up some of these networks. The other thing that I think is important to consider here is, a lot of what we're talking about when we look at this from kind of the perspective of decentralization is censorship resistant. And in a world where arguably there are crackdowns at times on free speech, I think we're seeing more and more of that. Maybe this plays a role. Maybe it doesn't. But if you feel like using one of these central, I would almost call them authorities in the tech space, to host your website, opens you up to the risk of being deplatformed or being censored, which we've certainly seen that, this might be an alternative that's attractive to people if they really feel that that's a real risk. But again, we'll see how this plays out, whether it grows or not. It is predicated on network effects. But these are some of the, the projects that stand out when you just look at what are the biggest by market cap, what are some of the use cases. DePIN, decentralized physical infrastructure, I think it's going to be a more prominent theme going forward. Keeping these on my watch list.
Super cool. Yeah. I mean, ton of use cases, but yeah, so liable to these network effects that we'll see what's sticky and what's not.
Absolutely.
But yeah, super cool options. I'm a believer. I don't know which one. Got to read into it.
Yeah. Well, look, the one that I own a little bit of Filecoin, a little bit of Helium that's been on my radar. You can look at the charts; they've gone down quite a bit from where they were.
But
so we'll see.
Own, but don't participate. You don't have one of these.
I'm not running a hotspot.
Okay.
No,
right.
Not yet.
So you're not all the way in.
Not yet. Not yet.
Okay.
But we could get there soon. Who knows?
Can we get this office on hotspots, or
that might be the way to do it. We'll see.
Zscaler wouldn't be so happy about that.
See if we can pull some strings. Yeah, powered by Helium. But yeah, that's going to do it for our show, Glenn. Wanted to hit on, again, DePIN here today. If anybody has any questions about this, wants to chat more about it, shoot us an email or hit us up in the chat here on the next show. Glenn will be back with me on Wednesday. And yeah, until then, we'll talk about what's going on in the market midweek.
We'll give it some time to pick itself back up.
I like it. That's going to do it for our show. We'll be back on Wednesday. Until then, I'm Ryan.
I'm Glenn.
Peace.